In this video, I'm going to be showing you the risk management strategy that I'm going to be using to pass a $50,000 FTMO account. This is the second part of the series. I did a video the first time last week. I want to first of all do a quick recap on what happened throughout the week because I started trading this account last week. I think last week, Wednesday, that was when I placed my first trade. I bought the account on Sunday on Monday last week. Right, so a lot of things happened last week. So let me just show you a quick recap of the trades I took and what happened last week so that we can get into this. For those of you that don't know what has been going on, I'm doing a video series where I'm going to be showing you how I'm going to be passing a $50,000 Profem account from FTMO. And if you have not watched the first part of this series, I suggest you watch it. You can go to the playlist section of the channel, or you can just click the top, somewhere on the top here. You're going to see the video there. So you can go over there, watch that one first, then you can come over here to watch this one. I'll also make sure that you click that like button and subscribe to the channel, and let's get into it. So this is the dashboard. As you can see here, this is the $50,000 FTMO account, and this is the dashboard on my FTMO. All right, so let me just show you the trades that I took here. These are the trades that I took. I took only 2 trades, but in multiple positions. So you can see the first trade I took here was on Wednesday. If you check the dates here, 29th, and then Thursday was 30th. That was when I took the second trade. So the first trade I took here on Wednesday, what happened was I have a rule that if the trade is not in profit after 2 hours, I usually close my trade. And when I entered the trade started consolidating for more than 2 hours. So I just closed the trade at whatever point it was, which was, I think this was minus 0.5% plus this one here. The same trades opened at the same time. Then the next trade that I took here was on Thursday. This one here was just a mistake that I made. The next trade I took was on Thursday. This was 30th of May. This was the one that hit my take profit. I held it till Friday, so it hit my take profit, making me $1,000. That is 2%. So if this minus this, that gave me about just above 1% profit in total. So if you look here, you can see my balance right now. I'm just over 1%. 1% is 500, so I'm just over 1%. Equity, same thing. All right, so hopefully this week I get more trades and we can pass this thing. Monday, price is consolidating. So this is the Asian session for Monday. What I'm going to be looking for is I'm going to want to look for price to head all the way up here to look for sales. So you can see how price was going all the way up and then pulled back and then ended the day in consolidation, ended the week in consolidation, and then started a new week. What I'm going to look for is I'm going to look for price to go back to this high and then give me an information, and then I'm going to look for sales here. All right, so looking at the chart here, this was a trade that I showed you guys in the previous video, that if price comes to the highs here, I'm going to be looking for a sell. So this was the high here that I showed you guys, and then this is what happened. So this is the 1 hour chart right now. I'm going to go into the 50-minute chart to show you what happened there. But first of all, what happened was I told you guys that if price gives me something like this, without getting to this high, I would actually take the sells. So remember I told you guys I took 2 trades. The first trade I took was here on Wednesday. So you can see price from the high of the week here, the highest point for the week. So this is Monday, Tuesday, Wednesday. So the highest point for the week was up here on Tuesday. And then price pulled back and started consolidating. And then price eventually went back to that high. What I saw this M formation that formed here. So I entered on the second leg. I entered right here. On the second leg, my stop loss was right above. My rule is after 2 hours, if I'm not in profit after 2 hours, after entering an M or W formation, I close the trade. I don't care where price is at. As long as it is in drawdown, I'll close the trade right there. So what I did was, if you count 2 hours from here, you can see where price currently is, which is this green candle right here. So I just closed the trade here, and then all throughout the day was just consolidating. So nothing really happened. That was where I made the 0.5% loss there. Then the next day, what happened was price eventually went back to this high up here, the high of the previous week. Gave me the M formation. If we change this to a line chart, you can see the M formation, exactly what I drew out for you guys, that I told you guys that this is what I'm expecting on this pair GBP card for the week. So price went all the way up there, gave me an M formation. I entered this trade right here, put my stop loss above and held this down. I don't usually hold my trades to the next day, but price came close to my take profit. My take profit was down here. Price came close to my take profit, and I didn't like the fact that they just came close and went back and then started and they ended the day there. So I just decided to wait and hold the trade to the next day to see what happens if it's gonna hit my take profit. And although there was a risk of also this hitting my break even, because they could also do something like this. Even if they want to continue down, they could have consolidated and then went up and then done something like this and then took me out at break even. I wouldn't enter this. But thanks to God, they just made the move. By the time I woke up in the morning, this had hit my take profit already. And if you go to I shared this in my Telegram. So let me just show you guys the picture here. I shared the trade here on my Telegram. All right, so this is the free Telegram that I have. The link will be in the description if you want to join. It's for free. You don't need to pay anything. So this was the analysis I made, right? That if price comes to this high, I'm going to be looking for sales. And then what happened was price went to the high. This was when I was about to enter the trade. So I just entered the trade here. I sent it out to the signal group that I have. This was when I've already entered the trade. Trade was already halfway in profit. Price of trade was halfway in profit. That's when I sent it out. Let's see how it goes. Second trade for the week. Right. This was the trade going to my take profit. And then this was when the day was about to end. I told you guys that I think I'll hold this until tomorrow to see how it goes. And then waking up in the morning, if you look at the time, you can see 6:55 a.m. 6:55 a.m. I just woke up. Like I just literally woke up at that moment and I looked at the chart and saw that this had hit my take profit. Initially, when I looked at the chart, I didn't see my trades. So I thought like, did this thing hit my break even? What happened? Then I looked at the history and I saw that it had hit my take profit. So this was when the trade hit the take profit. I took a screenshot here. So if you want to join the Telegram, you can feel free to join. I share some valuable information inside. We do live sessions every week where you can ask questions if you have any questions. And I'm going to be doing a live session just after this video. I'm going to be jumping into a live session. So without wasting any time, let's just dive into the risk management I'm going to be using to pass the $50,000 ftmo account. So first thing you need to understand is risk to reward in regards to your win rates, right? So when you're trying to choose what risk to reward to use, or when it comes to risk management, this is very important for you to understand. You need to understand your risk and your reward in regards to your win rates, right? Because you have to understand how both of them works together. Now, the first thing you need to understand is this table shows you the certain percentage of win rates that you need to have depending on your risk to reward. Now, if you have a one-to-one risk to reward, then you can't afford to have anything less than a 50% win rate, because if you win one, you lose one, you're going to be at break even. If you lose two and you win one with a one-to-one risk to reward, you're going to be in loss. So it's recommended that you have above 50% win rate. So from 60% and up, if you have that win rate with a one-to-one risk to reward, that would be good. But I personally do not suggest that you use a one-to-one risk to reward. That is very, very difficult. You need to have a very high win rate to help you psychologically and also mean making any money in the market. Or maybe if you have a big account, like a very large account, then one-to-one can work with you because you just need a few trades, then you make a lot of money. But if you don't, most people are not there, so you can't really use a one-to-one risk reward. A one-to-two risk reward, that's the safe spot. This is the one I personally use, or one-to-two risk reward. This one, you can have a 50% win rate and still be profitable, because if you think about it, with a 50% win rate, that means out of 10 trades that you take, you're going to win 5 and lose 5. That's a 50% win rate. And if you're risking 1% per trade with a one-to-two risk to reward, 50% win rate, what's going to happen is out of 10 trades, if you lose 5 and you win 5, at the end of the day, you're going to be up 5%, because each win is times 2, because the times 2 is a one-to-two risk to reward. So you're going to be up 5% at the end of the day. With a 50% win rate, you're going to still be up in profit. If you have a 60% win rate, you're going higher. 70% win rate, that's just the best. 80%, that's very, very difficult to get on a strategy, but it's possible. 90%, I don't think that is, I don't think you can see that anyway. One to three weeks to reward, that one, this is, if you can get this consistently, then even with a 30% win rate, you are going to be making a lot of money. 40% win rate better, 50% best, right? But the problem with the 1 to 3 risk to reward is it's not as consistent as the 1 to 2 risk to reward, because the hit rate is lower. In fact, the higher your risk to reward, the lower your hit rate. So your hit rate is like how the rate of them actually hitting your take profits is different from win rates, I think, or maybe they're the same thing. And you have a 1 to 4 risk to reward. This one with a 20% win rate, you can even be profitable. So even if you lose 8 trades, out of 10 trades, if you lose 8 trades and win 2, you're gonna still make money. No, you're gonna be at break even. Then if you make more than that, you're gonna be in profit. 1 to 5 risk to reward, even if you have a 20% win rate, you're gonna make profit. All right. Now, having a 1 to 4 and a 1 to 5 risk to reward is very, very, very difficult to get. Like the hit rate, unless you're swinging your trades, or maybe you have a very, very tight stop loss, which having a tight stop loss also makes you have a lower win rates. All right, so 1 to 4, you can make it work. You just have to have a good psychology based off of the fact that you're gonna understand. You need to understand that you're gonna lose more trades than you win because of your stop loss. But if you win a few trades, they're gonna be up in profit. So if you're strong psychologically and you can manage the losses, go for it. Me personally, I don't really like losing streaks. I don't like losing trades in a row. I prefer winning in a row. I like being in profits. I like drawdown. So I usually go with a 1 to 2 risk reward. I can go with a 1 to 3, but I found out that a 1 to 2 with my strategy and my entries, 1 to 2 hits my take profit more than 1 to 3. So I just go with 1 to 2. Right. So hope you guys understand this concept. Now, risk reward to win rates. If you need to be profitable with a 1 to 1 risk reward, you need to have more than 50%. With a 1 to 3, you need to have more than 34%. With a 1 to 3, you need to have more than 26%. With a 1 to 4, 21%. And with a 1 to 5 risk reward, you need 17% to be profitable. Now, understanding that, I know that when I'm trading this $50,000 account, I need to focus on less to make more. So it's not about how many trades I take, it's just about maximizing the trades that I take. All right, I'm going to explain that in the future. So the first phase of the $50,000 account is the profit target is make 10%, and the daily drawdown is 5%, and the max drawdown, overall drawdown, is 10%. So I must not lose 5% in a day, and I must not lose total of 10%. So 5% of the 50K account is $2,500. 10% is $5,000. So I must not lose those numbers. All right. So what I'm going to be doing is the plan that I have for the account is, and for also future accounts and any profit I'm entering, depending on the rules, is if I'm at break even or I'm in drawdown, what I'm going to be doing is I'm going to be risking 1% per trade. And 1% per trade on a $50,000 account is $500. I'm going to be risking 1% per trade with a 1 to 2 risk reward, meaning for 1%, for every 1% that I trade, if I win, I'm gonna make 2%. So if I risk $500, I'm gonna make $1,000. But if I lose, I'm gonna lose only 1%, right? That's the 1 to 2 risk reward. So if I win 2%. If I lose 1%. That's good. That's only if I'm in drawdown or if I'm at break even. That's what I'm gonna be doing. Or if let's just say if I'm lower than 2%, right? The moment I'm in 2% profits, the moment I'm up 2% profit or more, I'm gonna be risking 2% from there. Right, I'm increasing my risk. I'm varying my risk. I'm not keeping a fixed risk. I'm gonna increase my risk. Now, once I increase my risk to 2%, I only need 2 trades per month. For real, I don't need to pass. I don't need 2 wins in a row. 2 wins in a row. Right. So basically, if I'm risking 2%, so I'm risking $1,000, and with a 1 to 2 risk reward, I'm gonna make 4% on that trade that I take. So if I risk 2%, I'm gonna make 4%. If I lose, I'm gonna lose only 2%. Right. So with the 1 to 2 risk reward. So the profit target is make 10%. And in a perfect world, I will need 3 wins in a row to pass the account. So 3 wins meaning win, 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 no loss in between. All right, that's the perfect world. Although you won't always get a perfect world. Sometimes you might, sometimes you might not. But basically, in a perfect world, to make things simple, is the first trade I'm going to be risking 1%. If I win, I'm going to be up 2%. Right. From that 2%, I'm going to risk 2%. If I win, I'm going to make 4% from that trade. And then the 4% plus the 2% that I was up from that first trade, that gives me what, 6%. The next trade, I risk 2% again. I make what, 4%. 4% plus the 6% that I'm up, that's going to be 10% already. So I'm done with the account. I've passed the account already. That's a perfect world. But you know that if you have losses in between, it's not going to be perfect like that. You're going to obviously have more trades than that. Hopefully I get 3 wins in a row. Right now I'm up just a little bit above 1%. I'm still going to risk 1% and I'm up 2%. But let's just see how it goes. But hopefully, I know my strategy has a good win rate. So I'm obviously mostly I believe that I'm gonna get more wins than losses. I'm gonna get like I can get 2 wins in a row easily with the strategy that I'm training. So once I get two wins in a row with the 2% risk to reward, sorry, with the 2% risk, once the 2 risk to reward, I'm gonna be up. I'm gonna pass the account. All right, so I just need to be patient and wait for my setups to play out. So don't rush, be patient, don't hesitate, take everything simple. All right, so once I'm done with the first phase, I'm gonna go into the second phase. Now, in the second phase, I'm gonna do things a little bit differently, but still the same concept. Once I'm in break even or drawdown, I'm risking 1%, $500, the usuals, all right, to make 2%. If I lose 1%, right? But once I'm up 2%, I'm not going to risk 2% this time. Since the profit target is just make 5%, I'm not going to risk 2%. I'm going to risk 1.5%. So even if I lose, I'm going to still be up 0.5%. So I'm going to risk 1.5% mainly because that's all I need to pass the account. I mean, if I risk 1% and I make 2%, now I'm up 2%. I need only 3% to pass the account to make 5%. So 2 plus 3, that's 5. So all I need to do is just risk 1.5% times 1 to 2 risk reward. That's 3%. So 3% plus the 2% I'm up already, that's already 5%. So I don't really need to risk more than 1.5% to pass the account. All right. So if I lose, I'm gonna be just up 0.5%. So this is what I'm gonna be doing for the second phase once I'm at the second phase. Now the profit target is 5%. In a perfect world, I'll just need 2 wins. 2 wins in a row to pass. This should not be difficult. All right. So this is the risk management strategy that I'm going to be using. This is the plan that I have to pass the account. Also, when I pass the account and I get the live account, I'm still going to be applying the same concept, the same things there. Once I'm up, I'm going to be targeting about 5 to 10% per trade per month on the accounts. Then I'm going to get higher accounts from there. But hopefully we get something off. But before I end the video, let me just show you what I have for the week, this week, when I'm looking at the charts for this week. All right, so these are the pairs I trade. I don't trade USD pairs, like I said in the previous video. Let me just go over the currency pairs right now to show you guys what I'm going to be expecting for the week, the trades I'm going to be looking for the week. Now, without this reversal from here, what I usually do at the start of each week is I clear all my drawings and then reanalyze. So we have this high here, price has reversed, right? So now we are in a downtrend. What I'm going to be looking for, I'm going to be looking for sales. So on Mondays, I don't trade Mondays. So throughout today, I'm not going to be trading. This is Monday. I'm not going to be trading. I'm not going to be placing any trades. I'm not even meant to be looking at the chart just because I have a live session and I'm doing this video. That's why I'm actually even looking at this chart. Usually I analyze the chart at the end of the day, but let's just see what we have here. So let me show you what I'm going to be expecting. So now that we have that my bias is to the sell side, and this is Monday, I'm going to expect price to break to the upside on Monday and then probably end the day in consolidation. Something like this. I want to see something like this and then end the day in consolidation. And then the next day, I'm going to look for price to eventually go back to that high and then reverse from that high. I'm not going to be explaining the strategy in this video. If you want to learn the strategy, I explained it in the previous video in the series. So probably go check that out if you've not watched it. Not right now on this pair, nothing is going on for me. Eurocard, this one has just been consolidating. I'm expecting the same thing to happen here. Price to break to the upside. I'm looking for sales on this. Price to break to the upside, end the day in consolidation, and then next day or the next couple of days, give me an information to reverse this back down. CAD CHF, this one looks interesting because they've been falling. So we have here they fell and they fell like this. Now they formed the low of the previous week here, which they came to retest. Let me see what's happening on the 15-minute chart on this pair. All right. Okay. So what I'm expecting of this pair, if they don't break this low, if they don't break the low of last week, which is here, they don't break that low, then what I'm going to expecting is price can bounce up and then come and end the day in consolidation. Then tomorrow, if they come back here, I'll look for an W formation and then take this back up. But let's see what happens by the end of the day. Euro CHF, this one looks like they've broken the low, but it looks like they want to enter back. I can't really see anything happening right now. Till the day ends, then I'll know what is going to happen on this pair. GBP CHF, the same thing. Price is just going down, going down. I can't really see it right now till the day ends. I need to see the way the day ends before I can know what happens. CAD JPY. This has been going up, but it looks like the market has shifted back down. So most likely we're going to get a continuation back down tomorrow. I don't think I'm going to have any trades on this pair tomorrow or next. If they can go back to this high by tomorrow or maybe during the week, I'll be looking for sales at this high. Euro JPY looks like they reversed from this zone that I drew out last week. They reversed from the zone. Nothing really happening for me on this pair. If they can go back to this zone, I'll be looking for sales, but I don't think they're going back to this zone. But the market can do anything, so let's just see what happens if they go back there. This one, I wanted them to go to this high and reverse off of there. Looks like they came near it and then they reversed back down. I don't think they're going back to this high, so nothing for me on this pair. And then CHF I like what I'm seeing on this one. So this looks to me like an induction here, where market makers induce people to take buys at the start of the week, and then they're taking it back down. Well, I don't really think I'm going to be looking for anything much on this. Let's just see how tomorrow looks like. From tomorrow, I would know. So if you're not in the Telegram, consider joining the Telegram community. It's free. You're going to get updates there from me, and I'll see you guys on the next one. All right. Peace.